It's the start of a new month and indeed a new year, and that can only mean one thing, my friends. It is time for your piping hot monthly Bitcoin digest. Let's jump in. Welcome back to another video. My name is Ian Major. I'm an entrepreneur, Bitcoin pleb, and all-around raging capitalist. And allow me to extend you a very warm, happy new year. This is the first video that will go out in the new year. And I am pumped, as always, but I'm particularly pumped because I think 2022 is going to be a great year. Today's monthly digest is special and unique for many reasons. It is the first month in a brand new year, and I also happen to be recording this on none other than January 3rd, aka Bitcoin's birthday, the anniversary of the Genesis block back in January of 2009. And so in today's video, I'm going to just kind of rapid fire through some of the highlights from 2021. I don't want to be too backwards facing, but I think it is pretty extraordinary to really reflect on like what happened in 2021 when it comes to Bitcoin, because that's really going to set the stage, I think, for what we see in 2022 and beyond. So you won't want to miss a thing in today's video. For those returning to the channel, again, allow me to say welcome back, my friends. It is a pleasure, as always, to have you. I'm super excited for what we have in store for 2022. And for those new to the channel, I welcome you as well. I know there are many of you, over 80% of you, in fact, watching right this very moment, are not currently subscribed. So if you like this content, I invite you to consider subscribing and join us in our growing merry gang in cyberspace. I cover all manner of Bitcoin-related content, including kind of monthly digest, news analysis like this, but also a whole host of tutorials around different wallets, how to secure your Bitcoin, how to acquire Bitcoin, Bitcoin mining, running your own node, Lightning Network, and more. You want it, I cover it. That is how this channel works. But with all that out of the way, let's jump right into the meat of today. And I want to start just with a brief recap of 2021. All right, my friends, I'm going to rattle through this pretty quickly, but I think it is just totally warranted to reflect on what we saw in 2021 because it is extraordinary. I think there's this sentiment that because we kind of ended the year in terms of price as not as stratospheric as many folks kind of predicted and believed, right? Like there's this profound disappointment in a lot of individuals that, at least that I'm sensing on Twitter and other sort of spaces. And it's just like mind-boggling to me how we could possibly be this depressed when the facts are the following. So let's think about what happened in 2021. Of course, we were met with a number of new all-time highs, both in terms of hash rate as well as fiat exchange or the price, right? Even though, as we know, the most important price is the fact that 1 Bitcoin equals 1 Bitcoin. In 2021, we of course saw a uptick in institutional adoption, although probably not to the extent that a lot of folks were sort of anticipating or calling for. And so again, this is not just a kind of victory lap. Like, let's also call things out that I think were generally consensus beliefs by the community that didn't come to pass. And so I think while you saw, Tesla slapping 1.5 billion Bitcoin on their balance sheet, and while you saw numerous other kind of smaller players adopt Bitcoin on their balance sheet or adopt different Bitcoin strategies, that wasn't quite the Apple and Facebook and, Microsoft, and they're all going to put Bitcoin on their balance sheet in 2021, period, full stop. Now, keep in mind, we will still see some annual reports coming out from some of these kind of publicly traded companies. So it remains to be seen if maybe some snuck a buy-in, but I would find that pretty surprised. I think we saw most of December being relatively quiet as folks kind of shut things down for the year. And as we'll get into in some of the kind of on-chain views in just a moment, you definitely had some big selling pressure coming out of China as they basically had their hard stop for when they could no longer use, exchanges of any kind, given the sort of bans and crackdowns there. And on that note, you had what I think is perhaps, tough to rank these, but I think the most exciting single thing of all of 2021, and no, it's not El Salvador, I think it is the rebound in hash rate after the China crackdown. I'm going to flash this chart up, which is just total hash rate. This is in terahashes per second. And please do keep in mind that the y-axis is truncated, so you do start at kind of 100 million here. But nonetheless, this is an absolutely stupefying view. You have, this huge drop off from kind of April-May timeframe. I mean, this is basically 50% of the network just boom, gone in weeks, right? And you have what followed that, this inexorable climb back up, not just to what it was before, but to new all-time highs. This is a 30-day average view. And even as we break into the first days of the new year, you can see that 30-day average view is cresting new highs. And so it's really difficult to overstate how profoundly important this is. I mean, you had 50% of the world's largest computational network, boom, shut down within a matter of weeks, only to inexorably rise to new highs within several months after that. Like, just let that sink in. And so for all the FUD we saw, all the FUD we heard of, wow, China can just ban it, doesn't matter, yeah, politicians are just going to end it, good luck. I think we've seen just the extraordinary proof of resiliency that I think many who have been in the community for a long time sort of know to be true, but it hasn't really been demonstrated on such a broad scale in such an emphatic way. And so that, honestly, for me, is the number one. But of course, we had a ton of other exciting things. You had El Salvador coupled with the 2021 Bitcoin conference in June in Miami, which was a great time. I hope to see some of you in April down there in the 2022 edition. But of course, you had El Salvador adopting Bitcoin as legal tender, which is significant. And they've, of course, started putting Bitcoin on their balance sheet. A lot of people will say, well, El Salvador is a small country. You look at what this is doing and what the integration with the Lightning Network is bringing in terms of remittance services to the people of El Salvador. It is pretty darn cool. You've had a ton of integrations, PayPal enabling customers to pay with Bitcoin at their sort of merchant network. You have the integration of the Lightning Network in Twitter. Speaking of that, you have Jack Dorsey, who's left to kind of focus fully on Bitcoin. So you love to see it. You had the very first futures-based Bitcoin ETF trading in the US. Now, I've done whole videos on why that is a bad thing, why that is specifically a tool of manipulation to keep Bitcoin suppressed. Now, they won't win out in the end, but even with that being said, it still represents a kind of probably necessary step in overall kind of adoption. And you did see a spot-based ETF start trading in Canada and some other geographies as well. Although it remains to be seen whether the US will allow for such a vehicle to exist. You had Taproot rollout. You had Taproot both activate and then become live in November, which is great to see. Biggest update for the Bitcoin system in a number of years. And so while Taproot itself hasn't necessarily brought like anything that's going to be so explosively mind-blowing to the average user, it's setting the stage for a lot of really interesting features and new components that could help with things like privacy, things like on-chain efficiency, etc. So very, very cool to see there. You have politicians in the US stumbling over each other to take paychecks in Bitcoin. So again, good luck if they're taking their paycheck in Bitcoin, getting them to ban it, and so on and so on and so forth. So that's all I'll say in the recap. I'm going to go ahead and leave that here. I will link in the description down below this very entertaining recap from Neil Jacobs, set to the soundtrack of Crazy Train. So it is pretty good. I'll encourage you to watch that. But just like pretty mind-blowing stuff in 2021. And I think it's like understandably disappointing to people of like, well, Ian, like all this good news and yet look at the price, we're back at 40 whatever. And like, I sympathize with that view. I think a lot of us would naturally think that, okay, like price should reflect all these kind of excellent fundamentals and all this great news, that's happening. But like the other thing to keep in mind is that Bitcoin is still very much in price discovery mode. Like we are still mind-blowingly early despite all the great news and adoption that we just discussed. And so, don't get like the biggest thing is just don't get kind of frustrated or, depressed when near-term price doesn't perfectly mirror the underlying fundamentals. As we know from all sorts of markets, those two things do not always go together. But they generally tend to over a longer time frame. So lower your time preference, my friends. All is well. And as we will discuss in just a moment, things are probably better than you think. All right, so let's switch gears. Before we get into some of the latest kind of on-chain analysis, I want to just do another shout out to today, January 3rd, Bitcoin's birthday. Satoshi, whomever, whatever, Satoshi is, thank you on behalf of all of us. And for those who want to do a little extra celebrating, it is also the celebratory Proof of Keys event. And so I've done a whole video on that just a little bit ago, which I'll link in the description. But head over to proofofkeys.com. This is an initiative that Trace Meyer a few years ago kind of started. And I really like it as a kind of nice piece of culture within the community. Every January 3rd, any Bitcoin that you have on any kind of exchanges or third parties, take that into self-custody as a kind of reaffirmation of your self-sovereignty as a hodler. I think it's a great sort of celebration to acknowledge. So just a quick shout out there. But let's get into some of the latest on-chain analysis, which I think gives us some clues about what to expect in 2022. So again, those of you who have watched some of these monthly digests in the past know that I don't really do these to kind of predict any sort of near-term price action, but rather to try and just more deeply understand the market and its different participants, such that when different things happen, whether it's ripping up or ripping down, you're better equipped to kind of understand like, oh, this is what is happening, this is what this means. And so you have that kind of steely, reserve in those diamond hands to not get shaken out. And so I've grown to like on-chain analysis as a really nice sort of middle layer, if you will, when we think about like the really, really short term. So this would be, technical levels and traders and, moving averages and different levels of support and resistance, things like that, like basically the price action and volume statistics that would go along with technical analysis. That's like super, super short-term focus. On-chain, I think, sits a level above that and kind of goes a little more medium to longer term. Maybe we're talking over the course of like a particular halving cycle, for example, or maybe years within that halving cycle is, I think, where on-chain analysis sits very well. And that's been an evolution that we've seen across the year. Folks like Will Clemente, Dylan LeClaire have really popularized on-chain analysis, as this new sort of category of analytics that has really just taken off over the last year. And while a lot of people kind of bucketed it together with technical analysis, I think they're actually really fundamentally separate categories. So again, on-chain is that kind of more medium term versus the really long-term metrics, things like hash rate, so the security of the network, as well as things like total adoption, number of addresses, number of addresses of different sizes, right, that have different holdings, overall sort of adoption level kind of metrics. And so, of course, with the turn from one year to another, you get a lot of really good research reports come out. So I'm going to link a couple of those that I've found in the description down below. I'd encourage you to check it out if you're so interested. One of the biggest dynamics we've seen very recently that I think has contributed to, these doldrums we find ourselves in at the end of the year. I was promised 100K. Where's the manager of Bitcoin? Who can I call? Right? Like, obviously it wasn't to be. And this is an important learning in and of itself. Like the second you think you figure the market out, you are no doubt humbled by it. And so this is why it's super important to stay humble, stack sats. And that's really it, right? Why stress about kind of the near term, price action? We know what way it's going over the long term, and that is up and to the right. But in case you are, again, interested in what's happening underneath the surface, this is really what's going down. So you can see this breakdown of price change during different working hours geographically. So as you can see, the very top one is Asian working hours. And so as you can see, basically the entirety of December is just massively negative. And there's good reason for this. China, of course, cracked down on its citizens, basically said you can no longer trade any of this. It was a little unclear in terms of being able to hold it without transferring or selling. But suffice it to say that you have tons and tons of probably Chinese citizens who are dumping their Bitcoin because like their government said they couldn't have it anymore. And that is really unfortunate for the people of China. But, that sucks. And you can see how in the US working hours and Europe working hours, it's actually been positive. It's been green. And so, demand from elsewhere in the world is sopping up all those coins that Asia and specifically China are selling because there was the hard cutoff of end of year for Chinese-based exchanges to essentially prevent China-based users from trading. And so this, of course, coupled with the kind of macro narrative around the Fed raising rates, tightening, all that stuff, I definitely think has put a kind of damper on the market. But it will be interesting to see what happens. I do think January will set the tone for what we see, this quarter and probably this year in terms of price. My bet, for what it's worth, I've done a whole video on this, is that we do see a new all-time high this year. I think we probably see it in the first quarter or so, and I think we'll probably come back down to about where we are now anyway. And ultimately, we may end up kind of trading sideways for a while until we get to the next halving. And so I don't think we're going to see the like 80%, bear market kind of drawdown that we've seen in past cycles. And there's very good reasons for that. A lot of the selling pressure that used to drive that extent of a downward movement often came from miners. And as we know, that hash rate has shifted out of places like China to places like the US where they have better access to financing. And so if I no longer have to sell my Bitcoin from my treasury as a miner, and I can just, raise fiat as debt financing, like that's awesome, right? And so that's going to remove a lot of the downward pressure. And so I do think we are in a kind of different phase, and we're not going to see the kind of 80% drawdown, but I don't think we're sort of fully in the kind of super cycle yet. So that's my bet. Like all predictions, I'm sure they'll be wrong, but there you have it. That's kind of where my head is at. And the reason I think this has some legs is when you look at some of the on-chain stuff, which again gets us to that like medium-term sort of idea of where things might head. As we can see in these next couple of views, you've got, of course, one of the favorites, balance on exchanges. And so the orange line here is the balance on exchange. This goes all the way back to 2014. And as you can see, it's generally gone, up, right? As you would expect, as more people adopt Bitcoin, you're going to have more exchanges, you're going to have more users per exchange, and you're therefore going to have more supply on exchanges, all things equal. What's fascinating and what a lot of people are pointing to is this kind of global maximum that you see in early 2020. And this is really when, the Fed kind of came back out and just turned on the printing press to accommodate the economy as part of the, pandemic lockdowns, etc. And you have basically seen it go straight down since then. There was that little bit of a blip in the middle of 2021. But again, secularly, it is just down. And that is absolutely fascinating. And this flows into a lot of what we will see in subsequent views. For example, and so what this shows, this is from the deep dive report that Dylan and folks at Bitcoin Magazine have put together. The change over the course of the year in circulating Bitcoin, this is more or less the new issuance, right? Versus the change in illiquid supply. And so this means that illiquid supply, i.e. supply held by long-term hodlers that don't really, move or sell or transfer their coins, this has grown faster than the amount of Bitcoin that is circulating. And so that means that kind of long-term hodlers or investors acquired Bitcoin at a faster rate than supply issuance this year. That is super, super important, especially when you consider the fact that we are not that far from the next halving in sort of mid-2024. And so the incremental issuance of Bitcoin is just going to keep going down. And you have long-term hodlers who, despite all the kind of chop and sideways movement, they just don't really care. You can see that reflected as well in the long-term hodler supply. So again, these long-term hodler, I think, is defined as someone who has held, coins for 6 months or more, which again isn't that long-term, but it is what it is. But you can see that while that took a huge dip in March, April, May of 2021 with the huge kind of sell-off, Elon-driven stuff, that has come right back up And I think if I asked someone without showing them the end of this chart, like, what do you think happened to the orange line? I think a lot of people would probably trace it all the way back down because they have this like emotional kind of feeling that we've had this horrible end of the year, right? Because expectations were violated. And to be fair, that's a powerful thing. Everyone had these, massively inflated expectations. And so missing those expectations by that much is not great. But as you can see, it is barely a blip. Like, it hasn't even come down. It's still at the highest level since, I believe, 2017. And so the short summary to all of this is that the on-chain picture looks absolutely nothing like the kind of mid-2021, bear market where people were really in disbelief and kind of depressed. And it's very clear that, long-term hodlers are just not really batting an eye. And so it remains to be seen, like, what new impetus will kind of drive the price higher. That is unclear as of now. It could be new institutions jumping it, could be announcements, etc. But as of now, the price is kind of chopping sideways a bit. But overall, there appears to be a lot of, again, strength in some of the on-chain stuff once you look past some of the more short-term kind of technical indicators and things like that, which I won't pretend to know anything about. So with all that out of the way, let's close this video out and maybe hash out a few predictions for this year. All right, my friends, there you have it. So we recapped 2021. I think it really pays to just take a moment and reflect on all that happened, and particularly the resiliency that the network showed, both in terms of all the FUD that's getting thrown around by haters and academics and politicians and regulators and central bankers, right? Bitcoin just didn't really care. You had, this massive migration of hash rate, 50% of the network security just poof, gone over the matter of weeks, only to rebound and go inexorably to new highs. And so if nothing else, like, that is just extraordinary. And so don't stress when kind of, price action doesn't mirror all the amazing fundamentals that are happening. I think 2021, we've got a lot of good things to look forward to. I personally think we will hit new all-time highs this year, likely in the first quarter, maybe the first half of the year. And so that'll kind of represent the cycle being extended out versus past cycles. And then I kind of expect a mixed performance for the remainder of the year. I think we could just as easily end up kind of roughly where we are now. But guys, think about what opportunity that gives us. The opportunity to stack sats for longer at levels that you probably just didn't anticipate you'd have the opportunity to do. So as hodlers, we will gobble that up. But for now, we'll go ahead and leave this here. I know I've gone longer than planned even. I hope you found this valuable and interesting. If you did, you already know what to do. Give this video a like. Let me know your thoughts. What are your predictions for 2022? Let me know in the comments down below. I would also love to hear any topics or themes you'd like to see covered in future videos. I really do take that into account when making the schedule for the channel. But for now, my friends, we'll go ahead and leave this here. As always, every sat counts. And until next time, I'll see you then.